Hello guys, how you all doing? As you know, it's Sunday today, and as usual, I always give you a few charts that you can just watch over for the next coming week, right? And if you're new here, make sure that you give me a sub, and also don't forget to like my videos and check out the other videos, because this is where I give you like a thorough breakdown of top-down analysis of a certain chart. So today we'll be starting with the US 100. And before I start, I just want to make this clear, guys. I already saw that on TikTok there's already a guy that opened a fake account using my profile picture, my names, but his name, the profile starts with two dots, and he only started it 2 days ago, and he stole some of my videos on TikTok, and then he's posted them on his account, and then now he's telling people that he's send him 1,000, and then you get it as 5,000 within 24 hours investment, stuff like that. And now, guys, I don't do those things. I don't. So if you get scammed, if you come across someone saying what they banal investments but they're using my name, just know it's not me. And then now I don't have like backup accounts. I only have one TikTok account which has like just under 3,000 followers now, and then I have this YouTube channel, and that's it. And then you can also find me on Telegram for those ones that are interested in the mentorship. I gave you the 078-959-0383. That's the number that I have. I don't have backup anything. I don't have anything, and I don't do any working investment. So just watch out, guys. All right, let's get started. As always, you always start with the monthly chart, and here on monthly chart, I don't want to waste time because it's gonna be the same as to like what we had in the previous video that I made on US 100, because this takes more than a month for the structure to change. So here we can see that this is our area below, which is the support, and this is our area above, which is the resistance. So basically the price, you can see it has just tested the support, and hopefully it will go to the opposing structure, which is the resistance. So that's all that we have on our monthly chart, right? So now let's check what is happening on weekly. On weekly, this is a weekly support underneath. Let me just show you where I drew it. Remember, we had the monthly support, which is bigger than this, and then here I've got the weekly support, and with the weekly support the price went down and it tested the support, right? And then it went up. And remember, when it was here, as much as we are saying that this is the area below and this is the area above, sometimes the price will find another resistance in between, which can be a trend line. So in this case, the price tested the support and then gave us the engulfing bar, and then we saw saying that the bulls are so strong, they gave us the engulfing candlestick here, but now they just hit the area of resistance in the form of a bearish trend line. And what did they do? They pushed it down. The price was pushed down, but then last week they managed to push up again and form another engulfing bar. You see that? And we still have our thing above. So this is more like a second attempt of the bulls to try and break the trend line after touching the monthly support and the weekly support. So maybe now they will have all the strength to break the trend line, and then the next area of resistance will be this one. So that's all that you have on your weekly. Let's go down to daily and see what is happening on daily. So it is important that when you're doing your analysis, you always start at the top and then try and connect all the time frames together, right? And this one here, this is our weekly trend line. This is the weekly trend line, and remember we touched it here on weekly, and then it was pushed back down, and then now is the second attempt. Remember, we can't say the trend line is broken. This one is not broken. Why? Because it does not belong here. This is a weekly trend line, so we can't say it is broken because we have a daily candlestick outside. A daily candlestick can only break a daily trend line. It can't break a weekly trend line. If you're drawing a trend line on weekly, it needs to be broken by a weekly candlestick, right? And here, when you're going down, the bearish trend line that we had was this one, because we had a swing here and then came back. And here, if you see the horizontal line that I put here, this bigger one is the very same weekly that you saw on the weekly chart, right? The weekly working area of support, and then the horizontal one is basically where the daily support inside the weekly starts. So price just touched the weekly and then it went up, but that's not a trend smash. So it went up, gave us a swing, and it came back. So when it gave us a swing, it means this is the highest point on the area of resistance when we're going down, this one, right? You need to keep that in mind because I'm going to show you something here. So, and then it came back. When it came back, it gave us a lower low. That's when we put this trend line as our daily bearish trend line. Now the price came back and hit the higher time frame area of support, which is the weekly support. And then after hitting that, it started pulling up, and then it broke the daily trend line, bearish trend line. Why are we saying that? Because remember, we are on daily and this is the daily trend line. Therefore the trend line can be broken by these candlesticks because they are daily candlesticks and they can break the daily trend line. So they broke the area of they broke the trend line, right? And then it means this support here, this support is just that I don't like having too much stuff on the thing. I'm going to remove some of them, but I want to explain. So this support, this area of support, is the one that gave us a move that went up and broke the area of what? The trend line. It broke the trend line because from here we went up and broke the trend line. You agree? Let me remove it so that I don't confuse you, but there you get that, to say that the trend line was broken by this guy. So now the price moved up and then it is approaching the resistance here, and then it pauses and then takes up again. So it means the second area of support is this one. Remember, we have got types of support that you can have, which is the one that at the swing and the one at the market pause. So we had this one, which is a move up, pause, move up. So this first move up, it broke the trend line. You agree? Correct. And then you have a pause, and then this second move up, it broke what? The area of resistance. This one, you agree? So it means both of them, both this area of support on daily and this area of support, they're important because they both accomplished something. They didn't do the same thing, but one broke the bearish trend line, the other one broke the bearish the area of resistance, which means both of them, they violated the bearish structures, which is a bearish trend line and area of resistance. So both of them, they're important. So now the price, if you have been buying, but remember, now you hit what is this guy? We said this guy is a weekly, a bearish trend line. Remember, we drew it on weekly, and the price, when it hits the weekly is a way it's a very big a very big trend line, a very big time frame. The price hit that, and then remember, I think it was 2 weeks back, we used to talk about this, saying that you need to be careful as much as the move seems to be very smooth, but now we hit a very strong stuff there, and then you can see the price came back. It came back and then it dipped into the area of support that we just spoke about. Said it went up and gave us a higher high, and the move higher than and broke the area of resistance. Now it came back, right? And then that's where it got, it held there, it stays there for like 3 days or so before taking off. Now it is approaching. So this one horizontal line, I just put it there as the highest point that we have around this area. So if the price is to go above it, that's when you can say I have a higher high. It means I will have a trend line, a bullish trend line on daily, starting from this low, connecting with that low. But you can only have it after the price has given you a higher high. Remember, you don't have a trend line if you don't have a higher high or lower low. I mean, how can you say you are bullish whereas you're not making higher highs? You must make higher highs. Remember, the bullish move, you see it by making higher highs. So we can't put a trend line if you don't have a bullish trend line. So until you have the higher high, we can't put this trend line here. So that's all that you can say about this chart. So it bounced from this. Let me put it so that you can also see it on H4 when you are going down to H4, so that you will see that maybe you would have gotten a reason to go long there. And then let's go down to H4 and see what is happening that side. So you see, this is how you must approach the chart, guys. This is how you must approach the chart. This is how you must approach the chart. Yes, this big zone here, this big zone, this is the daily zone, and this one inside is the H4 zone inside the daily zone. So I can remove the big one. You can see where it is. Remember, this price moved up like this and touched that weekly trend line, and it came back and touched the daily zone. So let's remove it so that now we can only focus on the H4 stuff. So within that daily zone that we spoke about, instead, the daily zone was significant because it broke what? It broke the previous resistance. Now the price came inside it and found the support at the H4 area, and then this is this one, and then it went up, came back. And remember, when it was coming down on H4, this was the area of what? I mentioned this in the previous video. This was the when we were coming down, we did this, and then we went up. and you could put your trend line, H4 trend line, bearish trend line somewhere here when you're going down. I hope you'll agree with me. When you're coming down like this, because of what we came back and then made like a small swing there and then came back. Now we went up and playing outside the trend line, which means that bearish trend line has been violated. So it means this was the nearest area of resistance, this was the nearest area of support, and I said this is going to remain in consolidation until the day it breaks either the support or the trend line. Then you can go back into the trend. So it remained in consolidation throughout, I think, 2 days or so when it was here, and then from there, remember I said if it comes to this, you can sell, buy, and then until one of them breaks, you see. So that's what I discussed in the previous video. So we are buying and selling because of what? We are not in any trend. So I'm allowed to go in either directions. For as long as the space between the support and the resistance is big enough, then I can buy at the support, sell at the resistance, buy at the support until one of them breaks. Then I know that, oh, now we are no longer in consolidation. It means now we are going back to bullish. You see? So that's what happened here. So it just stayed here, and then went up. So it means this area of what? Of resistance got violated. Who broke this area of resistance? Who brought the azul? Who brought the azul? So is this guy here. This guy here. Because after forming this area of support, we went up, and that's when he violated the area of resistance. So remember, the only thing that can break the area of resistance is an area of support, and the only thing that can break an area of support is an area of resistance. So this guy here is a very smart, very important area of support. It's just that after breaking that resistance, price didn't come back to it. You would buy from there, and then it just continues going up until it hit the opposing structure. Remember, this was the nearest one, and then if this one gets violated, you move up, look for the next one, which is this one. Remember, this was where the price touched that weekly trend line, and then it came back. I even spoke about this, I think in, when was it? I can't remember, but probably 2 weeks back, when we said we hit the weekly area of a weekly trend line, bearish trend line. Now the H4 move went up and caused what? What do you call this? Bearish engulfing candlestick. You can see it engulfed that, and then again when it engulfed that, it swallowed this small pause here, the market pause. Remember, we went up and had a support here, went up, but we said this support is not something that is worth us trading. Why? Because the price is coming back from a weekly trend line. We can't fight that weekly trend line with H4 area of support, and again we don't have enough space in terms of the risk reward. Remember, we need 2:1. Those are the things that I discussed in that video. Therefore, we decided that this is not something that is worth you taking a buy from. So the price came back and broke it, and then now this area of resistance that I marked here, it was significant. Why? Because it gave us this move that broke the area of support, which is when I said you can take a sell from this. Why? Because this area of resistance on H4, remember, it was located at that weekly bearish trend line. Then after that touch, that's when we went down like that. So now the price is back at the very same resistance, but remember, we are interested in the first touch. So we wanted this one, and you got it. This was the first touch. Now this is the second touch. The price bounced again. This is going to be a third touch. Remember, the more a level is tested, the weaker it gets, and the higher the chances of it being broken. So that's what you need to be careful of. So if this H4 area of resistance gets broken, it means you need to move up and look for the next one, which is the one that I just marked with this small horizontal. This is the next area of resistance. So remember, it's a drop, and then we had a pause, and then we drop again. So this was the area of what? Of resistance, which is, you can see, is very close to the current one. But if the first one gets violated, then this is the next one. So I mean, you can't, hopefully you will break both of them so that it can give you enough space to move to the next one, because now between the one that you have now, they're just too close to each other. So basically that's all you have on and this one won't be significant anymore because the price is gone. So this is all that you have. So maybe what you can look for is, remember, if you're trading H4, you're not allowed to take long positions. So you could have taken them from there, but now the price is too high. It is at this area of resistance there. You can't buy against it. So rather, I think it will be safer for you if you just wait and for the price to violate this guy, so that it gives you room for you to, you know that when you are buying, these guys wouldn't exist anymore. Then you have got bigger profit margin, right? And I know there are those who are trading H1 also, but I will say, as much as the stuff are pointing to the upside, but remember, you're not trading on weekly time frame. Remember, on weekly you had that second bullish engulfing, and the price is attempting to break the weekly trend line for the second time. So you can see, if you're trading weekly, then you can just take the whole thing, but yeah, you can't do that. It's just too big. So if you're trading the smaller time frames, you need to be careful of the traffic along the way. So this is H1, and you can see, if you do H1, we don't have a lot. I mean, we don't have any room. So the nearest H1 support will be somewhere here, somewhere there, and the trend line will still look like the H4 one. So that's the what do you call this, the H4, I mean the H1 support. But I would say it's not safer for you to buy currently. But maybe if you're, I don't know, you're a risk taker and then you get reasons to go short, maybe you can try, take your chances, and then maybe exit somewhere there. But you're not gonna look to buy. Maybe I think it would be safer if the price would break this area of resistance. Then you know that you have got, you don't have any traffic. Because remember, it's nice when you're buying and there's nothing that is pushing the price against you, than to buy and you can see there's just too much traffic, all the factors pushing against you. There, the odds are not on your side. It can go in your direction, but you shouldn't trade like that. So basically, that's how Nasdaq looks like. And then I'll keep on monitoring it throughout the week, and then should the structure change, I will update you. But I have guys that joined the mentorship. They paid and said they want me to mentor them, and we are starting tomorrow. So those ones, I'll see you guys on the other side. And then the guys on, you guys here on YouTube, I'll keep on giving you new content. And if the structure changes like on this one, I'll always update you. And good luck with your upcoming week, the trading. And then I'll see you on the other side. Sharp sharp.